Hey traders, it's Chris. Hope you're well. I did promise members that I would do a coaching video. There's lots of questions coming back. Thanks for the questions, by the way. It really helps me a lot because I don't know what you don't know. And as promised, I'm going to go over the rules for you for intraday trading or position trading. There's lots of questions in terms of how do I get the entries? Where are the entries? Where are the stops? How do you calculate the stops? And also how to calculate targets. So I'm going to give you the rules to write these down. The first thing that you must know is where the major trends are. So the green watch list on my right should be exactly the same as yours. So the green indicates buys only and the red indicates sells only. And I'm going to give you a few examples. So these are parabolic trends that are very, very strong trends. Now, the other thing you can do, of course, is go to the website and you can see where the strong trends are. If you're not quite sure, Aussie USD is a strong buy, has been for a few days. We'll cover that one as well in the next few minutes. So let's get to it. The first thing that this is gold, and we know it's bullish. We don't need to look at the strong trends or anything. We've done our analysis on the daily and the 4-hour chart. We know it's parabolic. We know all the buys are in. And so we dive down to the 30 minutes. So I'm going to give you a list of things which you can write down, and they're like a tick box. So the first tick box is that there has to be a parabolic trend. That's the first thing. Okay. The next thing is what we call a trend meter, and that is what I've got on MT4. So this is the MT4 chart, my live account, and this is what I use to enter my positions. I don't use TradingView to enter positions, I just use them for the analysis. A couple of things to note. The first thing is here, this is the trend strength. And as you can see, this is New Zealand Canadian. We just closed that today for a profit. And as you can see, the strength is 69%. So in order for the price to continue up, it has to be above 70%. 70% is the magic number. If it's higher than that, 80, 90, 99%, then of course it's a no-brainer. The other thing I've got as rules, sorry about the alerts, they are very annoying. I've got 3 moving averages, the 21, the 50, that is the normal thing, you've seen this all before, the 100 and the 200, so there's 4, you can have 3 or 4. But the difference here is I've got these smoothed. They're just a little bit more reliable. So what you want to see in a strong trend is you want to see that all the moving averages are stacked on top of each other. Okay, so just make sure that that is in place and stacked on top of it. So as you enter, you want to see the price moving up into a strong trend on the trend strength indicator here or back here, wherever we entered, I can't remember. So that's the other rule. Write these down. So this is the advanced pro charts, but we're actually getting in deeper to the market so you can actually make better decisions. And if you're running a prop firm fund or just past your phase 1 and 2, like Ray, congratulations Ray, and a few others are actually well on their way to great success. And you do need a lot of tenacity, don't you, to get through it. I do understand that. And it's not easy, otherwise everybody would be doing it. Everybody would be successful. And that's why 90% of people fail. They give up. So anyway, before I digress, so here's the setup. So we've got this support line here, which is perfectly normal in a parabolic trend. You've seen it on the 4-hour chart. We use it on the 30-minute chart. Here's the buy and sell signals. So you could buy it on there, you could buy 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 there. You get the message. Now, here's the rules. Let me go over this for you so that you get a better understanding of a really good entry so that you can make a really nice profit, highly reliable, with a really tight stop and with a great target. So it's going to show you where your stop should be, it's going to show you where your entry should be, and it's going to give you a target as well. Now this is one way to trade it. Now if you are holding on to long-term positions like I do with the DVA every day for members, and you're trailing the 4-hour chart, happy days. If you're happy to do that, carry on. If you want intraday charts, this is the one. If you want to make a quick profit or make an income, this is the one. So let me go over the rules for you. The first thing is the trend has to be established, which it would be, of course. But the other thing that I want you to note is the stochastic 14, 7 and 3. I'm going to make some notes here of the swing lows. So you're looking for swing lows on the 30-minute chart. I'm just going to make some and give you the rules. And we've got another one setting up right now. Okay, so that is the rule. So we do have to have, so we've got the parabolic trend has to be in place on the daily video analysis. So you don't have to have the advanced pro charts for that, because I tell you that anyway. You need the strength trend meter on the MT4 above 70%, and you need the moving averages 21, 50 and 100 smoothed. You don't need them on here, you can have them on here. And if you've got a strong trend on the website saying strong trend, that's a bonus. And also, so the other rule is here, of course, we need to have a support line for buys, and then we have a buy signal, so that has to be in place. The stochastic has to come from oversold in an uptrend. Now this one here is interesting. This is money flow, bankers' money flow. Okay, so this is when the banks are stepping in. So let me show you this. So let me just show you. So here, for instance, let's go back a bit to give you your strict entries. Okay, so there's a pullback there. So let me just mark that. So there's your long position. That's a signal. You can have the programs to send to your email, which I do sometimes. And there's your swing low. But have a look at this money flow index. When it goes green, the money is coming into the market. When it's blue, it's neutral. And when it's red, money is coming out the market. So this is not a valid entry. It can be because you've got the structure, etc. But if you want the perfect entry, then you can enter on this one after this swing low. And as soon as the money flow goes green, then the money flow is going to drive the price higher because the banks are stepping in. I'll give you lots of examples, so don't worry. Now in this instance here, we can say that yes, we've got a buy signal, we've got a swing low. You could have got in maybe there, but then the money flow came out the market. There's a correction going on. Okay, and I will remind you of the rules again, and I'll probably send you a template maybe. So swing low, buy signal, still holding on to market structure, which is fantastic. And then you've got the money flow stepping in and the price takes off. So let's just do a few numbers here, shall we? Just to give you an idea of where your stop should be and where your, let's have a look at this one for instance. So let's have a look. So do our rules apply? It's come from oversold in an uptrend. The money flow didn't come in, but it did here. So there's your entry, say there. Your stop is just below that support line, so you've got a nice tight stop, and you're looking for 2 to 1. No more, no less than 2 to 1. That's number 1. So let's look at number 2. So this rule did not apply. This rule does not apply because the money flow is coming out of the market. So you can see straight away it's blue. It's not gone green. It's not gone green. It's actually gone red. So what can happen in those situations, it can go boom, like that. It didn't. So we're still in. We've still got a swing low again, almost a double bottom if you like there on the stochastic. But then we've got the money flow coming into the market. And so we can get in as soon as that goes green, probably on that candle there. So your stop is below that support line, 2 to 1. That's 214 pips on that one alone. Now, of course, gold does move a lot, so you might have to have wider stops than a currency. The currencies are much narrower stops. So let's have a look at another one. So this one here, long position into a selling area, and the money flow is coming out of the market. Okay, and a long position here, 7 o'clock GMT, just before London Open. Fantastic. And then we would have a position there, 7:30. And this one's a much narrower stop. So your risk to reward is going to be hit, your target's going to be hit much sooner. So there's your target there. Another 181 pips with a 2 to 1 risk to reward. Let's look for another one. Looking for swing lows first. So there's one there. It didn't come in till here. So let's do that one. I'll give you some currency examples as well. So green money flows going into the market. Your stop is below that support area. And you're looking for 2 to 1. So there we are, 2 to 1 right there. Another 291 pips. Let's look at some currencies just to give you a flavour of, so we're just looking for green, aren't we? So parabolic trends. So let's have a look at the Aussie USD. Don't forget, any questions, please come back to me. I'm just going to put these on now because hopefully you've got the rules intact. So there's a 28 pip stop there and a 55 pip target. So if you're risking 5%, you're looking at banking 10% each time. In other words, 10 trades like this and you've doubled your account. That's what we're talking about. Let's have a look at this one here, swing low, buy signal, and the buys came in, money flows coming in about there. And as you can see, there's a nice 23 pip stop just below that support area, and 2 to 1. And another one here. Let's have a look. I'll give you a few more examples. So swing low, the money flow didn't come in till here. Nice tight stop, and 2 to 1 there. Might only be 30 pips. If you imagine all these adding up during the day or within a few days, you're talking about a lot of money stacking up into your account. Let me show you US yen as an example. So keep going, keep going. And so we've got the change of character up there. So we've got the swing high here. But the actual money flow didn't kick in until we had break of structure. So around there. Might have got in there, somewhere about that, and your stop is about there, and 2 to 1. Another opportunity here, as you had a swing high. And where's the money flow? Money flow is coming out of the market right there. That's your entry. Nice 42 pip stop, and 2 to 1. No more, no less. Okay. Here's another one. Now, his is interesting because the money flow there is the money flow there. Whether that was midnight, I mean, it was valid, so let's put it on. If you're working at midnight, maybe during the Asian session, that is your signal there. Stop above the resistance area there, and your target is there. Any more? Let's see if we've got any more. New Zealand will be doing the same thing. Let's have a look at the US Canadian, shall we? So swing high. You can go aggressive, of course. You can sell it on the swing high. That's up to you. But I'm just trying to help you to make sure that you have the rules in place to give you better stops, better targets. So let's have a look at this and make sure the rules apply. So here we've got a sell, but look at the money flow still coming in. So you could just get tripped out quite quickly. So at this point here, the money flow is just starting to come out of the market. So a nice 23 pip stop, and 2 to 1. Thank you very much. Another 10%. Again here, the swing high, which is what you're interested in, and a short position, but the money flow down here is still coming into the market. And so therefore what can happen is you can get tripped out. So wait, be patient, and at 10 AM GMT you had a full-blown signal there. What time was that? 10 AM, yeah. And your nice stop here, just above that resistance area, 25 pip stop, and 2 to 1. Got hit within a couple of hours. Usually it doesn't take long. Within a couple of hours you're going to bank your 10%, let's say, if you're risking 5%. So it's a fantastic way to trade, and I will be including some of these in the Forex Signal group. If you're not in the Forex Signal group, you need to, and if you want to continue to get these, then you just need to stay in the Forex Signal group. I don't really want to spend more time on the charts than I have to, but I will just for you. So any questions, please come back to me, and I'm happy to help anytime.